That's that's just what I was thinking. I think there was there was much more in there, but that's good. That's good. I like it. I like it. I don't think I've ever heard it before. Shannon, you ever heard that before? I bet Shannon's never heard that before in her life. No, look at her. She seems shocked actually. I bet Katie's son has never heard that song before. So that's good. It's good though. So how's that make you feel now, Caitlin? Now that you've heard your song, and your husband likes it too, right?
He does. Yeah. I grew up, my dad was really big into music, so he kind of pushed all of the classics on me, like, I gotta learn all the backstories of all the songs and things. So
So
my
what's the
husband's getting
backstory?
introduced to that, and my kids
So
are.
is there
So.
more of a backstory to that song that you hadn't shared yet?
I don't know about that one, no.
Okay.
That's a lot of the songs when I do know the backstory, I'm like, oh, I shouldn't listen to that anymore.
It's like when Beth and I got married on the interview. I wish y'all could see it. God bless, I can't even say it. God bless little, whatever her name is, the woman I'm married to. Back in 1999, when we got married, they were interviewing us, and the first time we met or something, she saw the Aerosmith CD in my car, or probably tape at the time, that had you remember the one that had the cow udder on it or whatever with the piercing or whatever? And she was like, "Oh, you shouldn't be listening to that. That's nasty." And I'm like, "It's Aerosmith," and it's like, and so it's just funny hearing Beth talk about that's bad, isn't it? And it was funny in the interview, she's like, "That's really bad, isn't it?" And I'm like, "No, Beth, it's Aerosmith." Anyway,
My mom would take my dad's CDs and break them and throw them in the trash if she thought they were.
that sounds like something Beth would do. It really does. Okay, I failed y'all this week. I apologize. I left all y'all hanging. It was kind of cool to see y'all just twisting in the wind though, because y'all didn't know how to do your little assignments, and it was kind of cool to see y'all because y'all were like freaking out and stuff, and y'all were like, "I thought you said this class was not stressful and all that kind of stuff." So let's make sure everybody understands what to do. Now, some of you were having trouble selling SPX because SPX is big, y'all. And SPX is cash settled. There is no stock. There is no stock with SPX. There are just options. Okay. So you can't be assigned SPX. You can only, it's cash settled. You either have the money or you don't have the money, and whatever the loss is, you take the loss. So there is no stock. So I should have told y'all that as well. SPY, though, which is probably what most of you did, let's make sure y'all know how to sell a put. Right? Make sure everybody understands this so that nobody has an issue. And of course, I'm having an issue with my internet on the day that it's supposed to be 1 gig. Unbelievable. All right, so let's do this. Let's get our little SPY here so that we can put it in and show you. So what you're doing is, here's the stock price, the last, and it's up 3.22 today and blah, blah, blah. And you see you want something to have a lot of volume. If it doesn't have volume, y'all, then it's not liquid. And you can tell, say, there's something's liquid because the bid-ask spread is small. And in SPY, it is the most liquid underlying that you can trade. So I wanted you to go closest to 45 days. Now, I probably didn't even show you this. These are the days to expiration. So this is 45 days out. Remember, options have a limited life. And what I said was I wanted you to sell the 30 delta. Now, some of you are like, I don't see the 30 delta. Well, that was because you were only seeing 4 strikes. So if you see 4 strikes, you're not going to see the 40 delta. You're going to go, crap, here's delta. I don't see 30 delta. Okay, so you just go change this to all. So you see all the strikes, right? And then you go to a delta of 30. Now, here's where some of you got confused too. You said, Bobby, there is no 30. Well, what I should have done and failed to do, left you guys hanging in the wind, is that the 30 delta is actually 0.3 delta. So 0.3 delta. But you call that a 30 delta. And if I move you guys out of the way, you will see that the delta is an approximation of the probability of being in the money. So anywhere in this area is the 30 delta. And you see what a tight bid ask that we have, right? The bid is 550, 549, 550. It's 1 penny difference, which means it's a very liquid underlying. So then you would click on the bid. That's to sell the option. Now, some of you were selling 100 contracts. Okay, that's a bunch. That's a big meatball, or selling 10, right? So remember, each contract controls how many shares of stock. Isabel, how many? One contract controls how many shares of stock?
100.
100, right? So what you really want to do is work your order, right? So 546 is the natural price. The mid price is 546. So it's about the same, right? So that's fine. Nothing really to work. And you hit confirm and send and do limit order. We never do market orders. You can get screwed with a market order. Always do a limit order. So here you go. The break-even stock price is 385.54. So you're selling one 391 put, and the max profit's 546. That's the credit that you received from the 546 times 100 gives you 546. Now this is an IRA, so it's going to say, it's going to pretend that my buying power or the buying power usage, well, the max loss is $38,000, and that is equivalent to my buying power effect as well. Now, if I change this to a margin account, to a non-IRA account, hold on a minute. Can I get Beth to get that stupid dog out of this house? Hold on a second, y'all. So if I change this to a margin account, watch what the buying power does. The buying power reduces to $4,000. So in other words, the broker in a margin account, a non-retirement account, thinks that, hey, this is probably your max loss. Hey, Beth, will you get the dog out? Will you get the dog out? It's kind of interrupting the class. What, Beth? Yeah, or close the door. Well, yeah, I didn't know who else. I'm in the class. Whoa. All right. So what was I saying? Oh, so that's the buying power there, right? So the credit is 540, 550, buying power effect. Now, here's what a lot of you missed. A lot of you missed this. What happens if at the end of 45 days, the price of SPY is below your strike of $391? And some of y'all said we lose money. Well, it's more than you losing money. You are put 100 shares of SPY at $391. So your cost basis would be $391. You will own 100 shares of SPY, right? And your cost basis would be the $391. So if it goes down to $381, well, you just lost, a good bit of money, right? But your cost basis would be the $391. That's where you put the stock. So yes, that's kind of your risk thing. But do you see if the light bulb should go on? If you or your client was willing to buy SPY at the current price of 404, how about this? Go and do something that has a 70% probability of success. Sell the SPY, collect $537, and if we don't go down here, right, then you get to keep the $537. Now, let me tell you what a typical management technique is this. A lot of people say, I don't want the stock. Okay. So what you could do is after this thing goes down or you make 50% profit on it, a lot of people would close it out and sell another one, at wherever the new 30 delta is. Or you could do the 16 delta, or you could do the 20 delta, or you could do wherever you're comfortable. But it's kind of a risk reward type thing. You get less money down here, but you get a larger probability of success. That's how to get long a stock if you want to buy it. Never buy the stock outright. Now, if you're only buying one share or something, yeah, I got you. But if you've got a client or someone that wants to buy 100 shares of a stock, it is dumb to buy it at 404. Well, now what if the price of the stock goes up to 413 within the 45 days? Well, maybe that was a dumb move by you collecting the $500 because you would have missed out on the appreciation. But how often does that occur? It doesn't occur that often. So if somebody wants to get long stock, it is much better for you to sell a put or even for your client. Any questions on that at all? Just want to make sure everybody's clear. And I apologize for letting you kind of twist in the wind of that. Questions?
I think I'm still kind of confused.
Okay.
Like I put sticky notes on my computer so I can see like what buying a call, buying a put, selling a call, selling a put mean. But I think there's just a whole lot of numbers and a whole lot of extra that is kind of getting in the way of making my brain make the dots connect.
Okay. Well, what stock did you do, Kayla? What did you do, Kayla?
I did SPY.
Okay.
Actually,
So
I got a notification this morning that I sold it, I think, but I don't think that I did that intentionally, so I don't really know how that happened.
good. Okay. So maybe your order was left over. You may have put it in at a non-market time when the market was closed. And so it may have just kind of kept over and may have filled. So let's go again. Go to 45 days. Now you say, I don't have Delta over here. I don't see that. Well, all you got to do is do your drop down, option theoreticals and Greeks, and then it pulls up a long list that you can't see that's off my thing, and you can choose Delta. You go to the 30 Delta, which is
So
point
what
30.
does the delta represent?
Delta represents an approximation of the probability of being in the money. So
Okay.
a 30 delta means it has a 30% roughly probability of being in the money.
Okay. So if you got a higher delta, that would just mean you have a more odds of being right.
If you get a higher delta, so if I sold the 40 delta, there's a 43% probability of being in the money. I collect a greater credit, but there is a much higher probability that the price is going to go down to the 40, the 400. And remember, the probability that it touches this is what? Twice the delta, or twice the probability of being in the money. So what you need to know is delta is an approximation of the probability that an option will be in the money. It is an
Okay.
approximation. So 41 delta,
And
43%
depending on if
probability.
you're selling or buying would be if you want to be in the money or not in the money.
Right.
Okay.
Now,
All right. I think I got it now.
fools buy options, casinos sell options. Degenerate gamblers buy options, casinos sell options. Every now and then, when we sell options, we're going to have to pay the degenerate gambler off, but we provide insurance. Now, I say degenerates buy options. If you're buying options for income and that's all that you do, you're an idiot. If you sell options, you are a strategic trader. Okay. Now, I'm biased because I'm an overall seller of options. Now, if you were to watch my previous class today, I bought more options than I sold, and I did that as a hedge to the overall portfolio. But this is all just a little bit complicated, and I realize it's complicated. I talked with Katie the other day, and Katie, what I told Katie was this: Katie, I want to whet your appetite so that you will become familiar with some of these terms, so that if you want to explore it further, I'm here to pique your interest. You're not going to be an options expert at the end of this class. You will, however, know how to run the wheel. You will know how to sell options to acquire stock. You will know how to lower the cost basis in stock by selling options. So there are certain things that I want you to get out of the class, but you're not going to be an expert by no means. It's something that you're going to have to do a lot more digging. Okay. Any more questions on selling options? Yes, Isabel.
So when you are wanting us to do the probability of in the money, you want us to be at a lower percentage rate?
I'm just saying that this is a kind of a good risk reward area, this 30 delta.
So
Okay.
at the end, you don't want us to be in the money. You want us to be out of the money.
Well, it depends on what your goal is. If your goal is to keep the $537, you want to be out of the money at expiration.
Okay.
If your goal is to acquire the stock and you go, man, I want to get in as quick as possible, then you want the price of stock to go down to $391 so you get assigned shares. Okay. But these are all good questions, y'all. This is all good stuff. So I want to make sure that you put your options order in. Have all of your orders been executed? Is everybody got their little put sold and you're ready to go? If
I
not,
still
do
have
it.
to do mine.
Okay, so do it now. I mean, if you got it, pull it up, sell your option. If you're having trouble with a particular stock or want to know if it's liquid enough, let's bring it up and let's do it. Has anybody got a stock that you'd like me to show you in another stock other than SPY? This is your time. We help you. I'll sell it in anything. Well, I actually won't sell it because I've got a no dumb trade. That's my goal for the year, no dumb trade. So I can't just issue any trade in my accounts because these are real accounts, right? I don't want to issue any trades that are not part of my overall plan. But if you need to see something, now's your time. Here we are. We do this for you. Okay, if not, let's talk a little bit about Karen the super trader. Talk to me about Karen, somebody. What did you learn about Karen the super trader watching her amazing journey? Was anybody it was meant to inspire you?
I'll go. I've been talking enough today.
Sure, Karen, we'd love to hear from you.
I really like how she basically said, you know what, you guys aren't smarter than me, even though, obviously they knew more at the time, but she was like, I'm going to figure it out myself. I can respect that. Like that takes a lot for somebody to just learn everything about, something brand new and succeed at it. Not.
Very good. Yeah, she and her friend wanted to open a bakery. They wanted to make bagels and cakes and pastries. And her friend talks her into going to this little stock market education thing. And they get there, and all it is a sales pitch to spend $20,000 to learn options. Right? You'll know more about options by the time you get out of this class, probably, than they did in a $20,000 class. And, she studied every night and was just stubborn enough to make it work. So eventually, Karen managed a $300 million. It was not that big when you watched that initial interview with Karen, but she managed a $300 million hedge fund and, made over $100 million in profits. Now, ladies and gentlemen, do you remember when Vanetta says, how are you not a Lifetime movie? Karen may end up being a Lifetime movie because she was later investigated by the Securities and Exchange Commission. The Securities and Exchange Commission came in and said, hey, Karen, we want to see all your stuff. She shows them the stuff, and they find that she was rolling her positions and claiming incentive fees, so to speak. Like a lot of hedge funds, if you've ever heard hedge funds, a lot of them will have a 2 and 20. They take 2% off the top from your account for the assets that they're managing. You pay them 2% to be in their hedge fund. And then they take a 20% success fee. If they make money, then they take 20%. Now, I'm not exactly sure what Karen's structure was on fees, but they're saying that she was rolling positions when in fact she had losses and that she should not have been taking the success fees. Now, here's what Karen says. It's kind of a he said, she said. So they end up taking Karen to court, basically. And they find that Karen was charging fees that she had not earned. I'm trying to put this in a Lifetime movie as quick as possible. So Karen ends up paying a $1 million fine. She basically says, I can't fight the federal government. I can't fight them. She says, I think I'm right. I can't fight them. They come in. She has to explain, according to Karen, I'm giving Karen's story. She has to explain what a put and a call is to the investigators. She says they didn't understand even rudimentary things about options and what she was trying to do. But she said that her attorneys basically said, listen, We can fight this, and you will be out millions and millions and millions of dollars to fight the SEC. So what she did is she ended up paying $1 million fine. I think it was $1 million even. And she agreed that she could not manage money for other people. So the SEC basically comes in and shuts Karen down. So you all need to know that. Now, Karen is scheduled to speak with us this Thursday during our class. Okay. She has written a book, if anyone is interested in it. Everybody's familiar with The Wolf of Wall Street. Karen has written a book. It's called The Lamb of Wall Street. You can pick it up on Amazon if you'd like. Basically, giving her side of the story, and she talks about her charitable things that she was doing. Karen is really a remarkable woman. She had two funds, right? One of them, both of them, 300 million or more. And so she gifted one of those totally to charity, and she was giving the money away. And the lady was planting pineapples in Africa so that they would have a sustainable way to make money. It's an incredible story. So she's going to be with us on Thursday. Now, the last time that she spoke to our class, she was much more forthcoming. I don't know what she says. I violated a restraining order from a gag order from the SEC and everyone involved, that she was not supposed to be speaking about it. But she finally said, screw it. I'm going to tell the story. I'm going to tell the story. She is much more reserved this time, and I'm not sure why. So I want you to know coming in that when we have Karen on Thursday, if she still agrees to come, that let's treat Karen with respect. Let's treat her with, kid gloves. And it's okay to ask some hard questions. So if you have hard questions of Karen, that's fine. But I think what I really want to know, how did a lady who, and I'm not saying because she was a lady, I'm just referring to her as a lady. How did a lady who knew nothing about options go and start studying to a point that she started managing money and made $100 million worth of profits? And that's what is the intriguing part of the story to me. How did she do that? How did you attract, $100 million in fun? I mean, she didn't want to do this to start with. And a friend of hers knew how much money she was making. And they were finally like, hey, sign me up. And she's like, I don't want to do that. And finally they convinced her, and they gave her like $600,000. And then she started making them money, and then more people poured in. And before long, you've got a $300 million hedge fund. Can you imagine? So any questions that you have about Karen's journey at this point from me and what I know, anything that you want to explore with Karen, we'll do it in a Q&A fashion. I'll ask her questions, but I want you guys to be participating too. I want you guys to participate because it really is a cool story altogether. And I'm just grateful that she's sharing her story with us. Any discussion about Karen at all? Oh, y'all
I think
quiet.
I'm mostly curious about what kind of her business structure, how she set up the organization, what kind of licensing she had to have, and could the average Joe just walk in off the street and be like, all right, I'm gonna start managing money because I'm smart like that?
Yeah, that's a great question. I mean, I think we could get a lot of business tips about it. And there's a part of me that feels really bad for Karen. The lady that was her friend that they were going to set up the last interview that I had with her, they're not even talking anymore. It's almost like everybody just kind of abandoned her, I don't know. Maybe what she did was evil and cruel, and maybe she did charge fees, but I have not found. What happens, ladies and gentlemen, when you hear about Ponzi schemes and when you hear about all these things? What happens? Madoff. What happened with the Madoff thing after how many lawsuits were there? How many, you heard all these lawsuits, all these people crying in the streets that about the money that we lost. They're holding signs, they're going to court, there's been none of that with Karen. I can't find an instance of a single lawsuit. I don't hear one person on the internet publicly saying Karen Bruton of Hope International lost my money, and I am pissed. Sorry, Katie's son. I am upset that Karen has lost my money and we're filing a class action lawsuit against Karen. I can't find that. I don't think she lost money. I really don't. I don't think she lost the money. Karen says she never lost money. She says the fund did lose money. But guess what happened? She said once the SEC came in and started managing the account, then it lost money. I believe that. Maybe I'm just crazy enough to believe that. Yeah, Ken says she committed the sin of beating the system. Maybe she did. The system kind of came at her. I think if she had it to do all over again, she would not have gone on Tom Sosnoff's show. I think she would have kept quiet and in the shadows. But I think she was extraordinarily proud of what she did. And that's what hurts me. What hurts me is to see a woman in an industry that is predominantly dominated by men, to see her shut down and attacked when there are much more egregious cases, in my opinion, that are committed by men. Any of you ladies that would like to speak up to that? I don't know. I kind of have a feeling that it was just, I don't know. I feel like she may have been a victim, but we'll see after we have our interview with her, after we have our session with her.
Just a thought and or question to ponder a little bit. So kind of speaking to your point, would you say that from a regulatory standpoint, because she didn't necessarily have, the backing of a massive institution or anything like that, on top of the fact that, she still is a woman, but and she also had a very small team, even though they were managing an astronomical amount of money. Do you think that because of all of those factors and I don't want to say lack of connections that she had, but almost the enemies that she was creating unintentionally by doing her job really well, that made her an even easier target for people to say, hey, did you see this thing about what this woman is doing? Let me go to my homie here who's in bed with somebody at the SEC to get them on her so like they can get rid of our competition. Would you say that or assume that because of that, that made her an even easier target to, be subject to all of these things?
I think you hit the nail on the head. I think she was an outsider that came into this world dominated by good old boys and, in the smoke-filled rooms, and she made a name for herself. She made $100 million. Sosnoff saw it. He created Thinkorswim. She was using the platform that you just sold options on the paper account. He saw it from behind the scenes. He knew what this lady was doing. And I think had she not come forward, and I mean, Tom wanted to interview with her. I want to interview with her. I've talked with her before. Hey, I send her a Merry Christmas, by email every year. Hey, Karen, hope you're doing well. Merry Christmas. I think had she not come forward and shared her story, she would be rolling right along. Now, the interesting thing that she told me this year is she took a $200,000 account and she turned it into $1 million just in 2022. She's still rolling with her money. She's still doing it. So if you want to ask her about her strategy, if you want to ask her about what she's doing, how can I do it? Then I want you guys to be inspired by what she's doing. So fortunately, they didn't say, Karen, you can't trade anymore. They just said, hey, we're going to slap you on the hand. We're going to give $1 million. But more importantly, what we're going to do is we're going to take you out of the game. We're going to take you out of this male-dominated arena that is dominated by institutions and the big boys like the Madoff, and we're going to shut you down. And I think that's exactly what they did. Now, I may be totally wrong, and you may get a totally different impression, which is fine. when we speak to Karen. But can you imagine the SEC came in to investigate Madoff as well? What did they do to Madoff when they came to him? Does anybody know? Nothing.
They asked him for advice.
They did what? What was that?
They basically got in touch with him and asked him,
Yeah.
what is the process? Are you
They
doing anything wrong?
They got on the phone with the man and said, hey, we had a little complaint here. What's going on? And he said, blah, 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 blah. And they said, oh, okay. Okay, we're good. And even when they came out, they sent low entry level people to do sophisticated work, and they left and they found no issues at all either. They came into his office, y'all. They searched and they found nothing. And they had people coming to the SEC saying, you better watch what this dude is doing. What he is doing is mathematically impossible. But because he was a good old boy, because he was part of the system, because he had been, one of the founding members and president of NASDAQ, there's no way this guy's running the Ponzi scheme. But yet here Karen is that has no lawsuits against her at all. The SEC comes in and just brutally shuts this lady down. To me, is appalling. Now, I keep thinking at some point. Now, I'm definitely not this important, right? I am not this important, and I don't want you to think that I have delusions of grandeur. But at some point, someone's going to shut down a finance class, an investments class that is teaching you guys how to do this very stuff when it's supposed to be all textbooks and all, ABCD exams and all of this. And that's what is really concerning to me. So far, the University of Alabama has been very supportive of me coming in and teaching whatever I like in the world of investments. And so we talked about investing in your significant other. At some point, what if people know that Kaylin and Juwan and Katie are out there learning how to options trade and how to enter this, dangerous world that's just reserved for, the elite good old boys, what will happen here? I don't know. Probably nothing. But I think it's fortunate that the University of Alabama at least allows us to explore this. Now, am I teaching you some things that could potentially be dangerous? Yes. But I'm also teaching you something that you should be thinking about your entire life in terms of probabilities. Probabilities. You need to wake up in the morning and go, what is the probability that this is going to be an amazing, successful day? When I wake up in the morning, I think, thank God I woke up for another day. This is going to be an absolutely amazing day. And that's the way you kind of go at it. Now, I don't cross busy intersections and I don't walk on the side of busy streets. Does anybody know why?
Because you live in Bowden, Georgia.
Because I live in Bowden, Georgia. And I know the people that drive in Bowden, Georgia, hell, they're idiots. Because I see them. They're on their phones. They're distracted driving. Half the town's on meth, right? The other half's alcoholics. They're out driving like crazy. I see how they do. Am I going to walk on the side of the busy street in Bowden, Georgia? Hell no. Right? And I tell my mama's like, oh, I'll walk to the high school for the game. I said, Mama, are you kidding? It's dark. Have you seen these people in Bowden, how they drive? They're idiots. So I don't let my family walk on the side of the streets in Bowden, Georgia, because people are distracted. And all it takes is one little distraction to mow down 4 or 5 people. You say, Bobby, what's the probability that it happened? Okay, maybe low, but it's significantly higher now that people are driving distracted on their phones. Well, Bobby, Georgia, where you live, has a hey, no cell phones in your hand law. Come on. Everybody still does it. They're still distracted. And I don't want my family on the side of the road. So you need to be thinking about your life and your investments in terms of probabilities. Now, what does J.L. Collins say in his book, The Simple Path to Wealth? Let's move on to The Simple Path to Wealth. It's kind of simple, isn't it? he's saying it's not that complicated. He's saying, hey, put your money into, what is it, VTSAX, the overall stock market. And some of you will say, well, Bobby, isn't that risky? Isn't that risky? What if all the stock market goes crazy? What if all the companies in the stock market go under? Y'all, that's not going to happen. I go a little bit farther and say, don't do all the stock market, do just the S&P 500. So goes the S&P 500, so goes the continent, the universe. Elon Musk going to Mars. The S&P 500 is where it's at. Now, thinking in terms of probability, so far where you've got in J.L. Collins' book, someone just kind of give me your take on J.L. Collins and the Simple Path to Work. Well, is it a stupid book? Are you glad you're reading it? Are you thinking that he's oversimplifying it? What's your thoughts?
I find myself appreciating it. And then I guess because I'm already doing this for a living, part of me is like, well, you're kicking me out of a job. So there's that thought. But he did have a quote in there that I liked, and I shared it with Sharon, who works for me. And it was, stop thinking about what your money can buy and start thinking about what your money can earn. Because everybody is thinking about what their money can buy, even though they have no intentions of using that money to buy anything right now. And they're not thinking about the flip side of making that money work.
Very good, Katie. Yes, you kind of broke out there at the end, but very good. Yeah, think about what your money can earn, not what your money can buy. And I spoke with a group of high school students this morning, right? And a lot of them are looking at me like I'm just an idiot, right? They're like, "Whoa, man, hell, what are you talking about?" And you're sitting there saying, "Hey, save, don't go into debt on cars." Why do you have $125? It was a simulation. Why do you have $125 on furniture payment? Why are you going into debt on something that goes down in value and something that y'all know how the best time to buy furniture is? Look at Tuscaloosa Marketplace after the semester's over. You want to get you some good furniture? Look at a college town that you're near. Some of you are not near Tuscaloosa. And look at Facebook Marketplace right after the semester is over, or right toward the end of the semester. There are kids that are going, hey, it's got to go. I got to get out of this place. I'm going back home with my mom and my daddy. Buy that stuff cheap. Katie, you're shaking your head no. You disagree with me?
No, I'm agreeing. I just think it's ridiculous that some of them are like, I guess it's more, one of my best friends is a professor at Auburn. And she said it's just crazy how much money the kids have now and how little regard they have for anything. There I go again.
Well, we're hearing you though, so that's good. Yeah. I mean, they don't have little regard. So in week 3, you were supposed to read chapter 6, where it says there's a major market crash coming, and even famous economists can't save you. What, and we've talked about this before, what do people do when they see a market crash? What do? Katie, what, your phone starts ringing, doesn't it? What do
They
they
have to
want to
make
do?
dumb decisions. They want to sell.
They want to sell. They want to get out. And that's when you ought to be saying, no, this is when we buy. Y'all, the market,
Give me more money.
The market last year was down 20% at one point. What a fabulous time to buy. Yeah, but Bobby, the Fed's raising rates and interest rates are going up. More money's going to go. It's going to go buy. Exactly. Keep some more dry powder so that you can buy more. All right. So the market crash is coming and nobody can save you. That is the time to buy more. Chapter 7, he speaks about this. The market always goes up. The market always goes up. Ladies and gentlemen, the S&P 500 will always go up. During your lifetime, during my lifetime. Caitlin is running outside now because she's so ticked off about something. She's going outside. She's mad.
My cat's crying at the door.
Your cat's at the door. Even though her cat's at the door, her cat even knows that the S&P 500 is going to go up. It just is. Now, what if Tesla goes out of business, ladies and gentlemen? Tesla's in the S&P 500. What happens?
Someone new comes in.
Someone new. There is an eBay out there. eBay's hardly nothing now, right, compared to what it used to be. But there's an eBay just waiting to take Tesla's place. There's a Microsoft just waiting for someone to fall out of the S&P 500. There's another Amazon out there that we don't even know about that's going to take its place. So the market always goes up. The probability that the market's going to go up in our lifetimes and in your kids' lifetime and my lifetime is incredibly great. Doesn't mean we can't have a 20% down year in 1 year. Doesn't mean we can't have a 35% down move like we did during the COVID crash. Why do most people lose money in the market? This was his chapter 8. Why do most people lose money in the market?
They panic.
They panic. Why do they panic? Why do they not know? Whose fault is it in this country that people don't know to buy things when it goes on sale? And if you're going to sell something, to sell it when it's high. Why do they do just the opposite when it comes to the stock market? Have you ever thought about it?
Public school system doesn't want us to know the secrets.
Well, maybe. I can agree with that, but who's teaching in the public school system? And I'm not putting down on. I'm not looking up from my high loft going, huh, you know. But who's teaching in the public school system? Juan, you were going to say something.
No, I'm gonna let Palaniver go.
Okay. Someone else wanted to go?
Wait, Patrick, was I did I say your name incorrectly for one? But also, I think you're gonna say something. Okay, I'll go then.
You go.
Yeah, go Juan.
So I was just gonna say, for one, the people that are teaching are the same people that are doing the panic buying and selling. And a part of the reason why, they essentially do the opposite is because they are, letting their emotions lead with what they are with their investments. And, the media and news cycles and, everything is, oh, we're going to be facing this big recession and X, Y, and Z. And so then they feel like in order to protect their funds, they have to move it out of what is being volatile and move it into something that is going to be stable so that they don't lose value, as opposed to maintaining that long-term view and understanding that, this might be the thing, but at the end of the day, it's more than likely going to rebound, whether that is tomorrow, whether that's 5 years from now. It's going to move. And instead of pulling your funds out, because now that is not only a taxable event, but like the capital gains and like there's just all other things with that. But it just, yeah, that's all I got. I'm going to keep ranting.
No, that's good. And what he's saying is true. These are the people that are panic selling. These are also the people that don't know anything about the stock market. Maybe they took an economics class in college. Maybe they took an investments class in college. They don't know this stuff. And the industry wants to kick people like Karen, and they want to reward the Madoffs, and they want to keep you under their thumb so that we can sell you financial services that you don't need. Isabel.
Like when you're watching YouTube and you get those ads, like right before. I've recently, sorry, I have really bad allergies. I've recently noticed where some of the commercials are saying you need to put your money in a high yield savings account now. And I've never saw that before until after like all this bad stuff is happening within the market.
Yeah, because they know people get scared and they want to prey on that. Evan, you've got to comment.
Yeah, I just I thought that this conversation was interesting, and some people in this call right now probably understand this, but I think a lot of the world doesn't. There's always two sides to a transaction in the market. So when your everyday person is selling because they're scared, somebody has to be at the other end of that transaction to buy, right? And generally speaking, the big institutions and banks, they're going to be buying when we're selling. And I've always kind of looked at that and thought, well, that's kind of funny because the banks are always there to buy. If these big buyers are always going to be there to pick up my shares that I'm selling, then doesn't that mean the stock market will never go to zero? Isn't there always going to be someone or something kind of propping things up? And then also looking at that, I say, well, if these giant institutions are buying, who's going to move the market more, me or them? And the reality is the institutional investors have way more sway in how the market moves than us individual investors. So it's never made any sense to me why people say, oh, the market's down 10%, I'm going to get out. I think that's kind of a key component that a lot of us are never really taught. And unless you're really in the investing space, nobody really understands that. So I think that's probably another part of the issue that we have with the education system is stuff like that isn't taught, and people don't really understand how the markets work. So I think that if we had more education from an earlier age, we'd probably have a lot smarter individual investors.
Good comment, Evan. Very good. So here's what I want you all to kind of here's what I want you to come away from this course and this discussion with. I want you to know that achieving a level of wealth is incredibly simple. It's just not easy. There's a difference between simple and easy. What do I mean difference between simple and easy? It's simple, it's just not easy. What's not easy about it? It's simple in that put your money in an ETF that is predominantly stocks and keep putting in through good times and bad times, which is called dollar cost averaging, and doing it month after month, after week, after day, after day, after year, and allow that compounding effect. And we're going to deal with compounding a little bit in this course as well, to allow that compounding to work. Why is that so difficult? It's simple. We all know it's simple. Why is it difficult? Emotions,
Discipline.
Life gets in the way. All of a sudden, your Great Pyrenees that weighs 100 pounds, who is a vicious dog and will scare away the meanest coyote away from your goats and your chickens and your pigs, becomes a little baby when it starts lightning and thundering outside. So he breaks your window for the third time, jumping into the house so he can get in the house in a storm. And so now you've got to pay $150 for the third time to get the window in the house fixed, right, with the glass company. And this time we're putting in like bulletproof plexiglass or something so he can't break it out the next time. So you go to the credit card and you have to use a credit card to pay for that because you haven't saved. And then you were putting 10% of your money into investments, but now what do you got to do? Because you got to pay for the $150, you got to stop that, and you never start back. That's what you and I are combating. That's what you and I have to overcome. Let's talk briefly about the big ugly event. He talks in chapter 9 about the big ugly event. What's he talking about? The big ugly event. He didn't know it because the book was written before it happened, but he was talking about the COVID crash. Y'all, the COVID crash was 35% down. The COVID crash was 35% down. It was the greatest day that ever happened in my life because I was up 208% in my portfolio, overall portfolio. The crash is coming. Katie, were you in this business then? Were people calling you up going, I got to get out, help? Were you in the business then?
I had just started and was getting my licenses, and I had actually turned down like the most lucrative pharma job it was everything I wanted. And the guy had actually told me, he says, what if you get into the business and there's a crash? And I said, well, I hear that's where the money's to be made.
Look at that. You see that?
Yeah.
Do you see that? That's where the money's made. Warren Buffett said it, and I'm going to paraphrase Warren Buffett, okay? But he said this: when everyone is fearful, be greedy. When everyone is greedy, be fearful. Everybody now, yeah, go ahead, Katie.
He also, I've got 3 of his quotes in my conference room, and one of them was, we build arcs before the rain. And everybody thinks you're crazy because you're building an arc and it's not raining. What are you doing? But we all know that story.
It was kind of funny today. You know, I told you that the real money's in selling options. It's not in buying options. And I bought options today to hedge my portfolio. Why? Well, what if this happens? What if that happens? I was adding a little insurance to my portfolio. Adding a little insurance and building up of the arc a little bit for the rainy day is never a bad idea. In chapter 10, he says, keep it simple, considerations and tools. Here's what your job is. Your job, Kaylin and Shannon and Juwan and Katie and Isabel and Evan, is to leave this course and realize that this is a very simple game that we play. And to explain it to your clients, to your family and your friends, as if you are talking to your mama, and don't overcomplicate it. Now, Katie mentioned a while ago that it's so simple that it's maybe putting her out of a job. And I disagree, because if you can be there, Katie, and you can explain this to the layman in layman's term, yeah, might they think, hey, I can do it myself, and might they fire you and go on themselves? But I think above all, they're going to appreciate your honesty, your sincerity, that you are a genuine person, and that you are looking out after them in the simplest way possible. So rather than having them in 50 different assets that is going to underperform the market, you're going to simplify the process for them. Do you agree with me or you disagree? I think people will respect you for saying and expressing the simplicity of it all.
I can see that. I think another part of financial planning and overall these brokerage services, a big push internally with us, and I'm sure other places, is that we're not just here to trade. And that's, you know, the advisor that I took over from his retirement, that's what he did. It was majority trading in that space. We're starting to see it becoming more inclusive planning and like holistic. And so that's what would save me.
And it's kind of like I'm working with a personal trainer now. So people will tell you that losing weight is simple, right? Losing weight is burning more calories than you take in. That's so simple. But my entire life, I've not been able to do that. I needed help. So now I have a personal trainer, and we meet 1 hour every week. And I've lost an incredible amount of weight. I'm getting fit. I go to the gym 5 hours a week, sometimes 6. I act like I own the place. I think I could whoop any guy in there, right? And overall, now this is over several years, ladies and gentlemen, I've lost 174 pounds. Now, why didn't I do that the entire time? I didn't have someone keeping me accountable. Now I know I have to go to the gym, or my trainer is going to ask, Bobby, why aren't you here? I know that my trainer is going to weigh me in once a week on a scale. I know that she's going to work me out and nearly kill me 1 hour a week, every week. And every day I log my food into an online journal on my phone that you can't see. I log my food into an online journal of what I eat, every calorie, and I text it to her before I go to bed every night. And it doesn't matter if I have gone over my 2,093 calories that I get a day. It doesn't matter if I've eaten 3,000 calories or ate 5,000 calories or ate 1,000 calories. I send it to her every night for accountability. Katie, you need to hold your clients accountable. They need you for accountability. While they could do what they need to do, oftentimes we need a helping hand. Anyone got a comment or question on that? Do y'all see that? So I don't want you to think that you're putting yourself out of business. I think you're doing just the opposite. You are going to be the person who simplifies investing for your clients. You're going to be someone that holds their hand with a good bedside manner. Don't you like a doctor much better who has good bedside manner? I want them to tell me that I'm fat and that I'm going to die. I want them to tell me that and be honest with me that my blood pressure is out of control and I meet up with the diabetes. I want them to tell me that, but I also want them to have compassion and understanding that it is incredibly difficult as someone who has been overweight for the vast majority of their life to lose weight. Juwan, you're shaking your head. Yes, you agree with that? Anyone got a comment on that before we let you go for the day? So I want you to be inspired. It's simple. It's just not easy. It's simple. It's just not easy. And that's where you come in to help your client. Show them that it's simple, but hold them accountable. Hold them accountable. All right. Any other questions or comments on anything that's going up? Has anyone seen the GOAT assignment yet? Okay. We've got assignment about goats.
I saw that and it felt like a trick question, so I didn't answer it yet.
You're waiting for other people to go, right? You're like, there's got to be a trick in the goat question. It's too
Exactly.
easy.
Like, what am I missing?
Wait a minute. How can I get 30 points for this stupid little goat question? Right. So hopefully everybody knows how to sell a put. Hopefully everyone has sold a put in your account, and go do several of these. Sell a put in Apple, sell a put in Tesla, sell a put in Microsoft. You know, do one in IBM. Hey, Isabel.
How do you know if what I sold was done? Like, where do I go to find that information?
So you should be able to see it in your portfolio. So let me share my screen so you can see it. Okay.
Okay.
So what you should tab, right? And if you like place the order today, it'll say field orders. If it doesn't, it'll say working order. So let me just show you this. Let's say that I'm going to do an order of something that'll never get filled. So I'm going to sell a 391. I don't know if I can do this in this account. Hold on a second. $38,000 buying power. I don't know if I got that much buying power. Anyway, you'll see a working order here. Let me show you. You'll see it'll say working order. So if it's working, it hasn't filled yet. So what you would do is go cancel and replace. Right click on it, cancel and replace, and then work your order up. So make it less advantageous. So in other words, if you were receiving, your order said receiving 350 in credit, hit the little down button and make it 349 and then send that order and just penny it down till you get filled. So you'll see working orders and filled orders. If you are working, you've got to right click, copy and replace. Okay. And then, yeah, if you have any trouble about that, just let me know.
Okay.
And we'll work through it. We'll Zoom or something if you got any problem with that. So don't forget, please be here Thursday for Karen. I'm going to confirm that she's going to be with us. And like I say, she seemed a little spooky last time. So we're you know, I handled her really, really good last time. I think she'll be just fine.